Hey OG gang. So in about 8 hours at 8:30 p.m. Eastern Time tonight, China is coming back. The Shanghai Stock Exchange, the Shanghai Gold Exchange, the Shanghai Futures Exchange. After being closed for 8 whole days for Lunar New Year, the world's #1 gold buyer is jumping back into the market. And today's 5% jump in silver, all the way up to $87 per ounce? That's not random at all. That's the big money players getting into position before China opens back up. Because when the world's largest buyer of physical gold and silver comes back after being gone for 8 days, prices don't just stay the same. Let me show you exactly what's going to happen tonight, what to watch in the first 30 minutes of Shanghai trading, and why today's big jump is basically telling you everything you need to know right now. Looking at the numbers, roughly 75% of you watching aren't subscribed yet. If you want live reaction and analysis tonight, the moment Shanghai opens and we see whether China is buying, selling, or just sitting on the sidelines, go ahead and hit subscribe. This is live coverage of the most important market opening of 2026. If that sounds valuable to you, drop OG John AG in the comments. That's how I know you're locked in for tonight. If it's not your thing, no hard feelings at all. I'm here for the people who want to understand why $87 silver today is really about what China does in 8 hours. Now let me show you why China matters so much that today's entire 5% move is basically all about tonight. China is the world's #1 gold importing country. #1, not second, not third. They bring in more gold than any other country on the whole planet. China is also the world's #1 gold consuming country. Chinese families, Chinese investors, Chinese jewelry buyers use more physical gold every year than anyone else anywhere. And the People's Bank of China, which is basically China's version of the Federal Reserve, has been buying gold for 15 months in a row, all the way through January 2026. That's over a year of non-stop central bank buying, 74.19 million ounces total, which equals 238 tons. Gold now makes up 9.6% of China's total reserve assets. On the silver side of things, China controls 60% to 70% of the entire world's silver refining capacity. That's not a guess. That's documented data from the industry itself. When China is out of the market, you're missing the majority of the world's silver refining and processing power. The Shanghai Gold Exchange handles a massive share of global physical gold trading. We're talking hundreds of tons moving through that exchange every single month. The Shanghai Futures Exchange for silver and gold futures is what drives Asian price discovery. When all of that shuts down at the same time for 8 days, the whole market kind of breaks. Let me show you exactly what happened while China was gone. On Monday, February 16th, Lunar New Year Eve, Shanghai closed up, Hong Kong went half day and then closed too. Singapore closed, Taiwan closed, South Korea closed. Every big Asian market went dark for the Year of the Horse celebrations, and the US was also closed that Monday for President's Day. So from Monday, February 16th all the way through today, Monday, February 23rd, China has been completely missing from the precious metals market. So what happened without China around? Gold fell from $5,040 on Friday, February 13th, all the way down to an intraday low of $4,862 on Tuesday, February 17th. That's a $178 drop in just 48 hours, a 3.5% drop. Silver fell from $78.90 on Friday the 13th to $72.62 in futures trading intraday on Tuesday the 17th. That's over 8% in just 2 trading days. And why did it fall so hard? Thin liquidity, optimism from the Geneva peace talks, a stronger dollar, but most importantly, there was no Chinese bid. When the world's largest physical gold and silver buyer is closed and gone, there's nothing holding the floor under the price. London and New York paper markets can push prices wherever they want, because there's no massive physical buyer stepping in to soak up all the selling. That's exactly what we saw play out. Gold crashed to $4,862. Silver crashed to $72.62. And everyone was saying safe haven demand is dead. The Fed is being tough. Precious metals are over. Except for one thing. Hong Kong reopened on Friday, February 20th. Singapore reopened last week too. And they didn't sell. They bought. Hong Kong basically said yes, we approve of this recovery. They saw $5,000 gold and $80 silver and said yes, we'll take that. No Asian rejection of the price. No panic selling at all. They bought the dip that Western paper markets created during the thin liquidity period. And now today, Monday, February 23rd, the very last day before China comes back, silver surged over 5% to $87 per ounce. Gold rallied all the way up to $5,197 at the highs. This is the strongest single-day silver move since the recovery started 6 days ago. And it happened today, not Wednesday, not last week, today, the day right before China opens back up. This is not a coincidence. This is positioning. If you're a trader, a fund, an institution, or anyone who believes China is going to buy gold and silver aggressively when they come back tomorrow, you don't sit around and wait for China to drive prices from $87 up to $95. You buy today at $87 before China opens. That's the trade right there. That's what today's big surge is really all about. It's the last chance to get positioned before the world's #1 buyer comes back. Let me show you exactly what opens tonight and when. At 8:30 p.m. Eastern Time tonight, which is 9:30 a.m., Tuesday morning Beijing time, the Shanghai Stock Exchange opens. The Shanghai Gold Exchange opens. The Shanghai Futures Exchange opens. All three at the exact same time. After 8 days closed, Chinese markets come back to full operation. Chinese institutional buyers, Chinese regular investors, Chinese industrial users who need physical silver for their manufacturing, Chinese gold jewelry demand, the PBOC potentially announcing their February gold purchases. All of it comes back in one single moment tonight at 8:30 p.m. Eastern, and the first 30 minutes of trading will tell you absolutely everything. Here's what I'm watching. First, Shanghai Futures Exchange silver futures at the open. Are they in backwardation or contango? Backwardation means spot silver prices today are higher than futures prices for later. That signals physical tightness, meaning buyers want silver right now, not later. Before Lunar New Year, on February 16th, a German refining group called Heraeus confirmed that SHFE silver futures were in backwardation. Physical silver was tight. If they open tonight in backwardation again, after being closed for 8 days, that confirms nothing got fixed during the holiday. Physical demand is still extremely intense. Second, Shanghai gold price versus London gold price. Does Shanghai open at a premium to London or a discount? A premium means Chinese buyers are willing to pay more than the global spot price to get their hands on physical gold right away. That's bullish. A discount means they're not really interested and the market is soft. Watch the premium or discount in the first 30 minutes. Third, volume. Is Shanghai trading volume really high or just normal? Record volume on the first day back signals really intense buying or selling. Normal volume signals a wait-and-see kind of mood. The World Gold Council reported that Shanghai Futures Exchange gold futures volumes in January were up 17% month-over-month and 72% above the 5-year average. If that same intensity shows up tonight, we'll see it right away in the volume data. Fourth, physical gold withdrawals from the Shanghai Gold Exchange. This data comes with a bit of a delay, but if we see elevated withdrawals on Tuesday and Wednesday, that means Chinese buyers aren't just trading paper contracts. They're actually taking delivery of real physical gold. That's the ultimate bullish signal. In January, 126 tons were withdrawn from the Shanghai Gold Exchange. If February shows similar or even higher withdrawal rates, the physical demand story is very much real. Now let me give you the 3 scenarios for what happens when Shanghai opens tonight. Scenario 1, China buys aggressively. This is my base case, and I'm putting it at 55% probability. Shanghai opens tonight, and Chinese buyers immediately start buying gold and silver again. SHFE silver futures open in backwardation, confirming physical tightness. Shanghai gold trades at a premium to London. Volume is elevated. Chinese regular investors who have been locked out of markets for 8 days rush to buy what they see as the dip at $5,197 gold and $87 silver. Industrial users who need silver for their Q2 and Q3 manufacturing step in. And potentially this week, the People's Bank of China announces their 16th consecutive month of gold purchases. If this scenario plays out, silver tests $90 to $95 by Wednesday. Gold tests $5,250 to $5,300. The Lunar New Year thin liquidity crash to $4,862 and $72.62 gets completely wiped from memory. The market reprices itself to reflect that China sees Western paper selling as just noise, not real fundamentals. This is the bull case, and it's the most likely outcome based on all the data. The World Gold Council published their China gold market update on February 10th. Let me walk you through the key findings. Wholesale demand was robust. Withdrawals from the Shanghai Gold Exchange totaled 126 tons in January, a mild 1-ton year-over-year increase, and 11 tons higher month-over-month, thanks to strong bullion sales and jewelry restocking activity ahead of the Spring Festival. That's real data, not speculation. 126 tons physically withdrawn in January. Chinese gold ETFs added RMB 44 billion. That's US $6.2 billion, 38 tons in the month, the strongest start to a year ever on record. Assets under management and holdings reached all-time highs, record inflows and all-time highs in January. And that's before Lunar New Year even happened. The People's Bank of China continued to report gold purchases, pushing holdings 1.2 tons higher to 238 tons, with gold making up 9.6% of total reserve assets. That's the 15th consecutive month of buying. And then there's this line, with the Chinese New Year holiday approaching from 15 to the 23rd of February, both gold jewelry demand and bullion investment may improve, supported by self-rewarding and gifting-related purchases. The World Gold Council was actually forecasting increased demand during and after Lunar New Year, not decreased demand, increased. That's why Scenario 1 gets 55% probability. The fundamental China demand story didn't change in 8 days. If anything, holiday gift-related purchases were building up during the closure and they get released tonight. Scenario 2. China is cautious. This one gets 30% probability. Shanghai opens tonight, but Chinese buyers are hesitant. They saw the FOMC minutes last Wednesday, showing a hawkish Fed that's tough on rates. They saw Friday's hot PCE data, showing inflation at 0.4% month over month. They're uncertain about the bigger picture, so they don't rush to buy. They wait and watch. SHFE silver opens flat or in slight contango. Shanghai gold trades in line with London. No premium at all. Volume is normal. Gold just consolidates in the $5,100 to $5,200 range. Silver consolidates at $85 to $90. Not bearish, but not explosive either, just kind of neutral and chill. This scenario means the next big catalyst becomes Thursday's COMEX first notice day, not tonight's China Open. Scenario 3, China sells or just sits out completely. This one only gets 15% probability, the bear case. Shanghai opens and Chinese sellers actually come out. Maybe institutions that got caught holding long positions from January's $121 silver highs use tonight to exit at $87, or Chinese buyers simply don't show up at all. They think current prices are too high, and they wait for lower levels. SHFE silver opens in contango, signaling no physical tightness at all. Shanghai gold trades at a discount to London. Volume is below normal. If this happens, gold tests $5,000 support. Silver tests $80 support. The recovery stalls out. I'm only giving this 15% probability, because for it to happen, you'd have to completely ignore all the World Gold Council data, the PBOX 15-month buying streak, the record January ETF inflows, and the fact that Hong Kong already gave the thumbs up to the recovery on Friday. For China to actually sell tonight, you'd need a complete flip of every single trend that was in place before Lunar New Year. Possible, sure, but not very likely. Here's what I'm doing. I'll be watching the Shanghai Open tonight at 8:30 p.m. Eastern. I'll be checking SHFE silver futures immediately to see if they're in backwardation. I'll be watching Shanghai gold for a premium or discount to London. I'll be monitoring volume and I'll be posting real-time updates on what we're seeing. If China buys aggressively, we'll know in the first 30 minutes. If they sit out, we'll know in the first 30 minutes. This isn't some multi-day mystery that slowly unfolds. Shanghai opening tonight will tell the whole story. And here's why this matters, way beyond just one night of trading. China's return tonight is actually the setup for Thursday. Just 4 days from now, February 27th, is March 1st notice day for COMEX silver. That's when shorts have to notify longs whether they plan to actually deliver physical silver against their March contracts. COMEX currently has 88 million ounces of registered silver sitting in its vaults. Meanwhile, March open interest is floating around 230 to 240 million ounces, and the entire COMEX vault inventory, registered plus eligible, is only 366 million. If China returns tonight and buys aggressively, that confirms global physical demand is the real deal, which means Thursday's first notice becomes even more critical, because industrial users and long-term holders will be more likely to actually stand for delivery and demand their physical metal. If China sits out tonight, it gives COMEX more breathing room, because it signals physical demand isn't as urgent as the bulls are claiming. Tonight's Shanghai Open doesn't happen in a bubble by itself. It's the first domino falling in a 4-day sequence that ends with Thursday's first notice. And today's 5% silver surge to $87 tells you the market already knows all of this. Do your own due diligence, understand the risks involved. I'm not telling you to be long or short going into tonight. I'm showing you what to watch, so you can make that decision with full information in your hands. The Shanghai Stock Exchange, Shanghai Gold Exchange, and Shanghai Futures Exchange open tonight at 8:30 p.m. Eastern Time. The world's #1 gold buyer comes back, and today's $87 silver is all about positioning for what happens in the next 8 hours. Invest with logic, not hype. OG out.